Good afternoon, everybody, and welcome to Midday Market Update. Sorry, what is this one, Joey? Afternoon market action. All right. So I'm waiting for, there it is, U.S. government fund. Nope. That's not what I'm looking for. Looking for the news. Jay says he's pausing. I'm looking on my phone. And how come you got it before me, Jay? Markets, news. How come nobody's telling me? That makes me angry sometimes. Why am I getting all of this stuff on my phone that I don't want? I'm looking. There it goes. The Fed leaves rates unchanged, pausing after 10 consecutive hikes. There we go. Got that from CNBC. So he's pausing. A lot of people thought that was going to happen. I, on the other hand, am not a big fan of that. Wow. And let's just go straight to the program. You would think that with the pause, that everybody would be like, yay, let's go, let's rock and roll. This is intraday, 1 minute bars. Fed Governor Glenn says to raise rates 100 basis points. I said that a long time ago. Let's rip off the Band-Aid. But now, this is just the initial move after the announcement. We all know that we do this and then the market moves again. At about 2:30, we're going to tune in to what the Fed is saying at that time. Not a lot of people are here yet. Interesting. I don't know when my alert should have gone out. A lot of people should be here. We only got 71 people. I'm watching. Normally on Fed days, we get a lot of people in the room. Buy the rumor, sell the news, John says. Absolutely. Is it time? It's time to short big tech. I'm not a big fan of that, doing that yet right now, Dan, only because big tech is being moved by the outside forces of AI. Ted says, I'm here, Glenn. By the way, for all of you who put my name in the chat, it's Glenn with 2 N's. I'm so sensitive about that. Don't know why I am, but I just am. It is Glenn with 2 N's. Now we got 88 people. Man, where's everybody? Did they not get the alert? I sent the alert. I put the alert out there. Joey, go double check to see if the alert was, Okay, you did? All right. So I'm just waiting for the people to show up before we start to get hot and heavy into what's going on. But the announcement comes out. A lot of people anticipated that he would pause. I, on the other hand, really thought on paper that he needed to raise rates by 1 more month.
You sent the alert to the Wall Street Journal page.
Huh?
You put the wrong link in the...
Are you serious?
Yeah, you copied the Wall Street Journal one. I'll send another one out.
Wow. That's why we get, wow. How did I do that? That's why Joey's sending out another link right now for the alert. I'm sitting here, I'm like, where's all the people? Everybody's going, I watched the Wall Street Journal is going to get flooded and go, wow, what did we just do? And then they're going to find out, they're going to say, who's this VectorVest? We need to go help them out because they can help us out. Dan says the NASDAQ versus the 10-year yield inverted. One of them is lying. Since the market peaked, NASDAQ has been significantly impacted by the increase of interest rates. And you know something? The NASDAQ has been, but there's a lot of stocks within the NASDAQ, within the tech, that have been heavily moving up. When you look at NVIDIA, you look at AMD starting to move. New news on that, by the way, that someone brought to my attention. We'll talk about that later. And SMCI, a lot of these stocks, is the C3 AI. They missed on earnings, but they've rebounded nicely since that miss. So I am of the mindset of tech stocks. I'm not ready to short them yet. Are they taking a breather? I'm okay with that. Why? Because a lot of people have made a lot of money off the tech stocks. They could be taking profits. But overall, I can tell you that AI is not something that's a passing fad, that this is something that is here to stay for a minute. And a lot of other industries are being affected by the AI boom as well, not just the AI stocks themselves. All right, so breaking news, Dow drops 200 points as the Fed says more hikes are coming after this pause. And, you know, so this is where I sit back and I say, then why pause? Then if you know that you're going to continue raising rates, then why pause? Right? Stay the course. You already told the economy that you were going to cause them pain. All right, and that's fine. I don't think that we're anywhere near the amount of pain that could be caused by the Fed shrinking the economy. All right. And if you're saying to everybody that, well, I'm going to placate you now. And that's what I think this is doing. It's placating the people. I think he fell under the pressure to pause. If you know you're going to continue to raise rates in the future, then why pause now? Anybody want to give me some insight, your insight on that? I'm just curious to know. Can anybody give me their insight on that? All right, there you go, Chris. I've been saying that too. Instead of just ripping off the Band-Aid, we are suffering death by 1,000 cuts. I'd rather just hit the economy hard, all right, knowing that it's going to hurt, and then let's rebound and go on from there. Maybe to save the banks, give them time to put their books in order, says Michael. I don't think that we can save them because of what they've done, as we saw with a couple of the regional banks that fell under or got taken over. The time is going to come when these regional banks are going to report the losses on the short-term deals that they did. All right, it's gonna happen. I don't think you get around that. I honestly don't think you get around that. Jake says, true that, Glenn with 2 N's. My spouse causes me pain. Why pause? No pain, no gain. Wow, Fireblazer. Robert says, the Fed knows it takes 6 months for the rate hikes to continue to take effect. But they are taking effect. All right. Declines to raise rates. This is the first time in the 10 raises. And a lot of people are complaining and saying that, he raised too much too fast. Well, he did what he had to do because he screwed up and said that inflation was transitory. So he's got to pay the piper. This is actually needed. I controlled pullback for next rally. And do we have an opportunity to rally after all of this is over? Absolutely. But I'm looking intraday. Prior to the news coming out, you can see this little flattening over here. We're looking at a day trading timing signal. Look at the DTI for those of you who are part of our day trading jockey club. Look at the big jump on the bearish DTI. Now, again, this is the initial move. After the announcement, about 2:30, we're going to tune in to the Q&A session. We're going to listen to what he's got to say. And then the market's probably going to turn around based around what he says. Yes, for sure, a rally is coming. Absolutely, Robert. I'm on with that. This market reaction today could just be the algos and the floor traders creating liquidity. Won't know to the end of the day. And I think that, again, prior to the end of his QA session, the market's going to do a rebound. But look at that. A stark, steady decline. That's deep. That's a deep decline. And, again, everybody wanted the pause. A lot of people out there wanted the pause. And by wanting the pause, you were thinking that the market was going to turn around and be like, bada bing, bada boom. Well, wait a minute. Yeah. This market makes me want to shout. You picking up what I'm putting down? This market makes me want to shout. All right, so we'll see what's going on. Short term, we are overbought. Hope we are down 100 SPX points. Oops, I'm showing my hand, says John. Maza Ajaga, what is that? Market Reach says, Maza, are you speaking a different language? What, Maza Ajaya, I don't know what that is. Fed sees unemployment going to 4.5%. You know something, Ted? Even with inflation going up to that point, we're still low. We're still low. Even with interest rates as high as they are, I see that. Yeah, even with interest rates as high as they are, they're still low. So I think a lot of people are looking short term. We need some relief. Well, where the Fed is trying to give some relief, or at least sit back a little bit and see just how much effect the raising of the interest rates are affecting the market. I think we can all see that inflation is coming down. The last number I saw, as a matter of fact, let's do this. I'm going to move over from a market timing to a market climate graph. And the last number that I've got on inflation prior to what we just got was at 4.9. I think, what did it go down to? Can anybody give me the number? That's Urdu. Say it one more time. Maza Ajaya Ga Fa Yi. All right. That was Urdu. I hope I didn't cuss at nobody. Lord have mercy. I swear I hope I didn't cuss at nobody. A Fox says, I can afford to buy eggs again. Inflation is still sticky, very slowing decline. I'm with you on that as well. So, how about this? We got about 300 people in the room. Let's get more people. Today is an important day. Let's bring in people that you know in regards to wanting to understand the markets. Share the link. Joey's going to put the link in the chat for you. I need you to share the link to the live stream. We're going to take a look and listen to what the Fed's got to say at 2:30. I've heard you have Father's Day Jockey Club link. I ain't going to be here on Father's Day. Who said that, Trader Matt? I ain't saying that. Poor Joey's having to listen to Glenn's singing. Eagle says, Maza Agaya. I swear, if I'm saying bad stuff, man, I am so going to come after you guys and put you in timeout. I swear, I am. All right, so nobody gave me a good number on inflation. What's the new number on inflation? Anybody? Somebody? I know somebody's got to know it. All right. I know somebody's got to know it, but these are updated. This number is updated once a week. Again, my latest CPI number is at 4.9. Anybody give me one? Need some good stocks to buy. I got you, Lola. All right, we need a pullback. Look at Feng Yu's been going up big time. A lot of tech stocks have been going up big time. All right, but I think that for the most part in many of the tech stocks, a lot of those stocks are being moved by AI. Definitely moved by AI. Fed needs to take liquidity out of the market to pay down the Fed's debt. That's a good thing, says Robert. And I don't disagree with you. I don't disagree with you on that. So Fed rates today, unrealized losses on bank balance sheets will get bigger. Told you, in regards to the banks, that we got another shoe to fall. We definitely have another shoe to fall. Just in Fed projects 2 rate hikes this year. I'm thinking we still got more rate hikes. Nobody gave me the number on inflation. I can't believe none of you out there are giving me the number on inflation. Sigh. All right. So Lola wants to know what stocks to buy. Well, I'm thinking that there we go. Core CPI. Nah, it's not core. I don't want core. Core is the bigger number. I want the other CPI number. Oh, is it core? Is core what the Fed looks at? Is core what the Fed looks like? One of them, the Fed doesn't look at because it includes food and fuel. Because inflation rates at 4.05 compared to, there we go, 4.05. Thank you, RG. That's the number I thought we were looking for. I clicked this link to see Glenn's Mix Up Shakespeare. Did y'all watch yesterday's video? Type a 1 if you watched the video that I put out last night. Type a 1 if you put out the video that I put out last night about REITs. Where's my REIT guy? Where's my mortgage REIT guy? Where you at? I forget his name. I think it's 360 Mortgage. My spouse won't even look at my cord. Oh, yeah, Fireblazer, you're on one. I'm about to put you in timeout. All right, and Joey did a good job. It was good, but REITs are not for me, says Chris. Joey did a good job with ad-libbing my beginning of that. I sent the video to him, and he did a good job mashing that up. That was good. If nothing else, if you don't even want to look at it, just look at the beginning. I had a little fun with it. All right, I had a fun. Trader Matt said great REIT video. A couple of you live stream were asking for me to do a REIT video. All right, let's get to this. Let's get to the viewers tab. Let's talk about what stocks I would think about still buying. All right. I still think the market's going to do a rebound, especially after the Fed comes on. But a lot of the top stocks in the database, we got 9,000 stocks. A lot of the top stocks in the database are moving down. All right. Let's talk about Lola, what I would be doing now based upon market timing. All of our market timing is in an up call. So that tells me that it's okay to buy stocks. When I go back to the market timing graph, let's go put the market timing graph on a 3-month graph. So Lola, wow, look at that nice jump up. We've moved off the level of support down day to day. Actually, almost if we continue to go down a little bit more, we will be setting up for a bearish engulfing pattern, which could be a possible turnover at this 3-month high right now. We are sitting at a 3-month high on the VectorVest composite. Let's go to 6-month graph. We're not at a 6-month, but I do like that we've, over time, we've definitely broken through this downtrending market. I'm going to take off this wedge that we did have. I'm going to take off this because I don't need it because we have a level of resistance. We're now set up right now to at least get to the 6-month high on the composite of about 59.96. We're sitting at 57.93, about $2 off from the 6-month high right now. So do we have some legs to go? Absolutely. The Fed's decision could really aid in the movement of the market to even go even higher right now, at least up to that 6-month high. Lola says, I only do options. So Lola, let's talk about that. Let's go to the viewers tab, looking at the top stocks in our database by our master indicator, VST. Now, the cool thing about saying that you only do options, notice that I can very quickly define which stocks in the top of the over 9,000 stocks that we track have options. If you look at the exchange column, you'll see what exchange, over-the-counter, NASDAQ, New York, stock exchanges. Anything that's got a little X in front of it are stocks that have options. So today, as the market is moving down, I would preferably like to stay away from the stocks that are going down today. So I would look at AVGO. They did have a deal with Apple a couple of weeks ago, still keeping the stock moving up. UFP, I'm only highlighting the stocks that are up today. All right. These are the top stocks in the database. I'm only highlighting the stocks that are up today. All right. I'd right click after I highlighted them. Go to view stock graph. So Lola wants to know, what stock should I be buying today? Let's go put this on a 2-month graph. I like AVGO, bottom left, top right, after a big pullback here. Looking at the 3 and the 8 also, as the stock had a big pullback day on an end of day graph, the 3 and the 8 solidified and kept you in the stock. Patience, the patience stop that I always like to call it, the patience stop, is our stop price. Did a good job keeping you in that stock. Stop it, Fireblazer, because if Lola comes out and she does some things and tells you, I'm not stopping it. I'm gonna sit right here and watch it. I'm gonna eat my popcorn. You better stop messing with people you don't know. I'm trying to help a brother out. You better stop messing with people you don't know. All right. So I do like the 3 and the 8. I would really like to see us take out that 1-month graph, that 1-month level of the high, but I do like that the stock's price is moving up. So Lola, what else do I? Wow, UFP. Look at that. Bottom left, top right. Thank you for all the research you do. AMD helping everyone. I just wanted to say I looked everywhere where I couldn't find the sector for AI stocks. We got a watch list for AI stocks out there for you. All right, 3 bearish gaps already told you what was expected, says Jerry. What's up, man? I haven't seen you here for a minute. I like MCHP off the base, and it's up today. Again, any stock in that space is a stock that I do like. When is the popcorn issued to us? Lola didn't say anything yet, so ain't no popcorn. It ain't no popcorn. Amir says, I couldn't find. What does it say? It says I've got about 50 stocks in that list of AI stocks. You want that list, you have to be a subscriber to the VectorVest software. You know something? We give you an easy opportunity to become a VectorVest subscriber to the software. 99 cents for 30 days. Joey's going to put the link in there. 99 cents for 30 days. And for at least 30 days, for 99 cents, you can see that AI watch list. Lola, I do like this stock. Fabrinet, another stock. Look at the pullback here. End of day, look at the 3 and the 8, squeezing but never crossing bearish. The stop price is there as well. Boom. And the stock's price right now is at a level of resistance, though. Look at the 2 big wicks at the top of the candles. I'm at a level of resistance. I'd like to break above that level. Remember, I'm looking at 1-month graphs right here. JBL, look at that one. You're welcome, Amir. Look at that one. I like that stock. So, Lola, you want to know some stocks to take advantage of? All I had to do is go to our stock watch list. I'm not feeling STM. I know it's a semiconductor. I'm not feeling this one as much because I've got 2 closed candles here. I've got a possible retracement happening. I'm not going to quite call that a gravestone doji, but I got a lot of selling pressure on the most recent wick here. I'd be careful with this one, even though it's moving up again. AI is moving a lot of these stocks up. Fix leveling out. I do like the move. A little bit of volatility sitting in a channel, utilizing the 3 and 8s to get in and out. I do like it overall, but I'd wait to see if we can break above that level of resistance of about 162.87. And again, Lola, knowing that many of these stocks that I'm looking at do play options. I am at the stock watch list. Where should I go? No. All right. Let me go. That was the last stock in there, Lola. Hopefully, I've given you some stocks to at least take a look at. These are some of our top VST stocks in the database that are actually moving up at the time. Good morning or good afternoon, Ravi. So going back to the viewers tab, I'm going to go back, Amir, to the watch list viewer. From the watch list viewer, we do have something called an overview watch list. Overview watch list. In there, you will see a watch list that we've created for you guys called AI stocks and ETFs and AI hardware providers. I am not going to show these lists because it's a perk of being a VectorVest subscriber. You're a subscriber, we have these watch lists for you. All right, we have these watch lists just for you. So that's the reason why I'm not showing all of the stocks that are in there. You got to be a subscriber. So there you go, Amir. That's where you find those stocks. That's where you find those stocks. The Fed's mission is to get interest rates high enough to slash inflation from a 5 to a 2, even if it means pushing the economy into a recession. Guess what? I don't think that he never said that he wasn't going to push the economy into a recession. I think that it was clear when he said that he was going to cause the economy pain. He was up front with that. Part of causing the economy pain was a possible recession. Now, the other side of that statement is, are we going to have a soft landing or a hard landing? All right. And that still leaves yet to be seen. So I think the pause, and let's go back to the graphs. Let's go see the pause. Down day. Now we've gone down enough that right now, if the market were to close, we do have a bearish candle formation known as a bearish engulfing. Let's go put this back on intraday. Intraday 1 minute bars current day. The market's just a falling. You know what the market is? The market is free falling. Yeah, y'all know that song. JBL earnings, was that on one of the stocks that I just looked at? JBL? I don't remember. But an earnings report will always move a stock, but it goes beyond that. Let's go to the stock viewer. Let's go pull up JBL individually. Even though it might have hit earnings, JBL, JBL, it is moving up. Fundamentally sound stock, Lola. I do like that. CI above 1, buy recommendation. They grow their earnings at a clip of 20% a year. Positive earnings. They do pay a dividend. It's a super safe dividend. I like that stock. I can't say that. Hold on. I'm going to cheer that. I do like that stock. That's a great stock. And let's go see if it's under or overvalued. It is undervalued as well. That is a good stock. All right, that is a good stock. I like that. So when Fireblazer says, no, I cannot, I have no options, I'm like, listen, even if you can't play options, $98, this is a solid stock. My dog just ran out of my room based on free falling. Sigh. And Todd says, stop, my dog is howling. You guys are haters. Sigh. Jake says, hey, Glenn, you stated yesterday that the shipping stocks are going up. Do you know what day? I don't know what day specifically. I just saw them starting to move. I saw the industry starting to form some kind of level of support. And then I saw a couple of the stocks starting to move. Do I know which day? No! If I knew all of that information, you think I would be here telling you all that information? No! So, that's all I got to say. That's all I got to say about that. All right. If your wife has a cell phone, she doesn't need a... What are y'all talking? Why are we going... Fireblazer, I just put you in timeout. Mass Luxury says Boat is a good shipping ETF. Let's go take a look at it. Boat, B-O-A-T. Let's throw that into the graph real quick. Let me see if I can confirm my suspicions about the shipping industry. View the stock graph. Put this on a 3-month graph. I told you, I found a level of support and started moving up. And I didn't use this ETF altogether. I forgot what I used. But I saw that the industry was starting to move. I do like the 3-8 crossover on the industry. Look at that. The 3-8 happened on 6-7. So it happened 7 calendar days ago. I do like that. What's today, the 14th? It happened 5 trading days ago. I do like the shipping stocks once again as they start to get ready. You will know soon and make us all rich. So Amir, again, I may not be pinpointing the exact day, but you know a good point. If I'm looking at this ETF, if it gets above 29.29, the industry should be rocking. If I'm a little bit more aggressive, the 3 and the 8 is already crossed on the industry, so I really like that. Did you say to buy CTRM? Mark, you're in timeout. There you go. Mark, you're already in timeout. Man, why are y'all looking at that one nerve, that Glenn's one nerve, and trying to touch it? All of y'all trying to touch that one nerve. Eagle says, my wife just wants more and more money for me to make. Then you're the husband. You're the head of the household. You better do what she asks. All right? You better do what she asks. Beyond and Neo. Not a fan of Beyond. BYND and Neo moved on news. Neo did move on news. Anything that's fake meat, I made money on it way back when it first came out. I made like $100 a share, way back in the day. Let's go view the stock graph on Beyond. Put this on a 3-month graph. It's starting to move. But I guess I'm biased. I'm biased against them. But from from a money making perspective, it has bounced off a level of support a few days ago, right about the 3.8 did cross on 6.5. All right, a couple of down days, but enough that the stock's price is still moving. The 3 and the 8 are still good, and it's above the stop price. Recently went from below the stop price to above the stop price. I can't say no to it. RT is above 1. It is in an uptrend. What was the other stock you just gave me? Was Neo. It's down a little bit today. View the stock graph. Hold on about Beyond as well. Look at that. Fundamentally not sound. It is in an uptrend. No CI above 1, so it goes down more than it goes up. They're not making money. Then, you know something? Even though it's bouncing off support, the company ain't making money. Do you want to be in a company that doesn't make money, especially knowing that earnings is the engine that drives the stock's price higher? Neo, grossly overvalued, fundamentally not sound. Best thing I can always talk about when it comes down to an EV company is they're only as good as their ability to deliver because the demand is high. So the Fed's getting ready to talk in about 3 minutes. They're not making money, but they do have positive earnings growth rate. Let's view the stock graph real quick in regards to Neo. I know that and I don't remember the news. I know that it did move on news. And put this on a 1-month graph, put this on a 3-month graph. It broke through a nice level of resistance of 880, but now it's testing as a level of support. It broke through yesterday, now testing as a level of support. Put it on a 6-month graph. I got an overall, almost a downtrend. It just broke out of the downtrend. This was news driven. One more. I'll do one more before we go listen to the Fed. I'll put in Fang Yu. FNGU. Tech stocks. And again, a lot of the chip companies are what's moving the tech space. A lot of people think it's overbought. I won't disagree with you, but I still think it's enough news driven to push it higher. Let's go view the stock graph on Fang Yu. Put it on a 1-month graph first. Man, look at that move. You can't fight the tape. He's going to be speaking in about 2 minutes, Jerry. You can't fight the tape on these stocks. Whether overbought or oversold, look at that 3-month graph, 6-month graph, 1-year graph. These tech stocks are at a 1-year high. So a lot of you will say, well, it's going to go down. I still think that AI right now is a strong enough factor to keep pushing this space higher. No, I'm not going to do one more, Amir, because I got to get ready for the Fed to talk. The Fed's going to talk. Let's go listen to the Fed talk. How come I can't push play? Sigh. All right, hold on. If I click there and click here, it's waiting. All right, it's still waiting. It won't come on until 2:30. Can you take a look at your Pharma Phase 3 stocks? I didn't make any for this week, CB, because I thought and knew that we were going to spend more time listening and reacting to the Fed. So, Joey, do I need to turn my speakers up or what do I need to do?
No, you'll hear when it comes on. Just turn the volume up on that. Yep, turn it up.
All right. So, let's go listen to what the Fed's got to say. She's like, Mr. Jerome, it's time to come out. Jerome is like, wait a minute. I got to finish drinking this water and keep getting my stuff up to date. But the people are out there. Excuse me, miss. I got this. I'm the Fed chairman. I know what I'm doing. Let me get myself together. Thank you for your insight. Todd told me to shush. Did you just shush me, Todd? Did you just really shush me? Wow. I just got shushed by Todd. Can you believe that? I got shushed. Joey doesn't even shush me. He tries.
Shh.
Oh, whatever. Todd just shushed me again.
Hit that button right there.
Huh?
Hit this button right here. Look on my screen.
Which button? Don't be shushing me. Oh, okay. To make it bigger?
Yep.
That's interesting.
Didn't do nothing?
It says it's unavailable.
Probably YouTube. See if YouTube will take you to it. Like just this.
Oh, hold on. Here? I clicked on it. Where's your mouse? I'm watching you.
All right, we'll hit play. And click right here. Will I take you to it?
Oh, there it is. Let me turn it up. There it is. That looks good or better, doesn't it?
Yep.
Can I still do that?
Now you can, yeah.
Oh, look at that.
It's like you're in there.
It's like we're in there. Woo! He's not talking yet. John says he's talking.
Here he comes.
All right, here we go. Shh. I'm going to take notes, though.
Good afternoon. My colleagues and I remain.
Can you hear it
squarely
good?
focused
Yes or
on
no?
our dual mandate to promote maximum employment and stable prices for the American people. We understand
Yes.
the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt.
Ooh, the full effect.
In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year.
Watch the market, folks.
While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year.
It's still low.
Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go.
So, pause. That doesn't make sense.
The projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
Markets responding.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy,
right.
especially
Yellow
housing
lights.
and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far
Somebody
we've
go
come
give him
in
a
tightening
Halls
policy,
or some water.
the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%.
That is the DTI layout,
and to
Tim.
continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy.
Which means you succumb to everybody.
In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be
Watch the
most
market.
likely
3-8 just
scenario
crossed
going forward.
intraday.
If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored.
I'm not restless.
Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run.
Yes, Mark. Thank you.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right. So I'm going to ask you type a 1 or 2 in the room. 1, do you want to stay for the Q&A? 2, if you don't want to stay.
You and the committee the confidence that waiting
Everybody
will
chime
not
in
be
right now.
counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed action, most recently were easing.
I did a refresh. Am I live now?
I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed.
Joey, you should have put a poll up about if we want to stay here or not.
That of the speed of tightening,
That's probably
the
an
level
easier,
to which rates would need to
fairer
go,
way to go.
and then the period of time over which
Joey's
going to
put a
keep
poll instead of
policy
typing it in the room.
So at
that
the
way I
outset,
can see a
going back
percentage of
15
who
months,
wants to say.
The key
who
issue
does
was how
not.
fast to move
I
rates
think that's
up
a fairer
and move
way
very quickly
to do this.
by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential.
There's the poll.
So
Answer it in
seemed
the
to us to
poll.
make,
And I can
obvious
watch
sense
by
to moderate our rate
percentages
hikes as we got closer to our
of
destination.
if we should stay or not. I
So
think
the
that's a
decision
fairer
to
way to make a
consider
decision.
not hiking at every meeting.
Dang, Joey, what the hell did you just do?
To return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far it...
Wow. Glenn, how do you view the market timing chart you have? I'm looking at, I've got real time, so I'm looking at intraday 1-minute bars. That's what I'm looking at. I'm looking at intraday 1-minute bars.
We have come. It may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen.
You
at
heard
the
that
next meeting,
statement?
including we did not decide or really
The
discuss.
doors are open to keep raising rates. All right, let me see what the poll says.
Anything about going to an every other meeting kind of
Poll
an approach.
says 57% yes, so
approach.
we're going to
really
stay.
Were focused on
At least
what
for a
to do
little
at
while.
this meeting.
So there was no kind of initial debate about the possibility of July. Any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July 2 things. 1, decision hasn't been made. 2, I do expect that it will be a live meeting.
You're not going to fall asleep, Tom. I'm here. How are you going to fall asleep if I'm here?
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots, stronger GDP,
Sigh.
less of a hit to unemployment, slower progress on inflation, and I'm wondering, in this sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like.
Whoa! Joey, what are you doing?
Demand's not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up.
Todd.
These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved.
Yeah, I don't know what's going on with this. This is not fun. But I am watching the market respond. Again, this is what normally happens. There's an initial move when the announcement comes out, but then
down
look
a
at
bit.
that.
Inflation estimates moved up a bit, and all three of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So, although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time.
Only the cues that are
And
moving.
I think you go back to the three-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going.
That's the only one moving.
You start with goods. With goods, we need to see continued healing in supply side conditions.
Eagle, it
definitely
ain't
improved
going
a
up.
substantial amount, but if you talk to people
There's
in
the
business,
market.
they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels.
Sorry about that, folks.
And it's really a matter of time as that goes through the pipeline. In fact,
I don't know if I want to stay for too much more of this if we're going to keep doing this. I do apologize for that. The thing is that as much as I love
I think
Joey,
any forecast that people are making right now about inflation coming down this year will
should we
contain
buy
a big
today? What do
dose
you
of
think? I
this
got
year
3
and next
yellow
year will
lights.
contain a good amount of disinflation from that source.
The market's not
again,
telling me it's
probably going to come
okay
slower
to
than we would have
buy
thought.
right now. I would manage the stocks that we have.
That leaves the big sector, which is a little more than half.
Wow. All right.
Pardon me,
Joey, what do you think?
of course,
Should we
inflation.
stay or
That's not
stop?
housing services, and we see only the earliest.
It's up to you, man. I mean, it keeps messing up, so probably just stop.
Yeah, I'm with Ramor. There's a lot of people watching this. It's like almost 20,000 people watching this.
Signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs.
All right. This is what we're going to do. We're going to continue looking at what's going on in the market. There's the reaction after the Fed is starting to do some talking. I want to see, let's go back to the viewers tab. Out of all of the indices, what's moving? Folks, for anybody who's saying the market's on the run, we see that by way of the VectorVest composite. But the only thing in the positive right now is the Qs. Not even the IW. The biggest loser to this downside besides the VIX, people are jumping out of the lower dollar, riskier stocks. So for all of y'all that are saying it's okay to buy, man, if I'm going to say it's okay to buy, I better be moving on stocks that are moving. So what would I do? I would go to searches price volume. Let's go to the unit search tool. If you want to see what's moving right now, let's go to searches price volume. For these, this is for all you aggressive folks out there. I'm going to run a search that's going to look at stocks that are up at least 10% today. And these are the stocks. If you're going to want to jump on board right now, let's go to intraday, 1 minute bars, current day. These are all stocks that are up at least 10%. Would I take this stock now? No. It made its move this morning. I'm trying to find out of these stocks, what stocks still have the potential to move up. Now, interesting about NEXT, look at that. That was the intraday high, which happened earlier this morning. It's starting to run back up to that. I'd wait to see if we can take that out first. What did Eagle say? Please buy. Look at the history of 92% chance of S&P rally. Listen, I'm not a speculator. if you want to buy, I'm not going to tell any of you not to buy. I can't, let's go. Intraday, 5-minute bars, current day. As a matter of fact, hold on. Graphs, let's go back to the market timing graph. I usually don't look at 5-minute bars on the market timing graph. The 3 and the 8 crossed on the 5-minute bars. I see that. Let me ask this question. How many of you think that it's the right time to buy intraday right now? Type of 1. If you're looking for more confirmation in knowing if it's time to buy, type of 2. All right? I just want to see where your heads are at. How many of you think that right now, because the 3-8 crossed, that it's okay to buy stocks right now? How many of you are looking for more confirmation, type of 2? All right. End of day, I'd look for end of day. I need, and this is an aggressive move. I'm going to tell you that. This is a super aggressive move. Please buy, read historical. Eagle, I won't let you push that in here. Listen, I am not going to be on board with telling you what you want to hear. I need to tell you what you need to hear. What you need to hear from an indicator that looks over 9,000 stocks. Intraday 5-minute bars. I've got an aggressive move on the market. For those of you who want to go back and say historically, then go for it. But for the mindset of what's going on right now, I'd rather err on the side of caution than to err on the side of speculation and you get burnt. And I'm not scared. I'm real. It's not being scared, Eagle. I'm being real. I've got positions right now that are doing well. And I've been managing those positions. I'd rather you guys. Now, let me back up a second and tell you why I feel this way. How many of you have taken a chance on something just to get burnt big? Type of 1 in the room. So, Eagle, I'm going to go after your statement by asking this question. How many of you have actually said, man, this looks great. I'm going to, and only to get burnt? Type of 1. That's a real statement. And Jerry is right. I'm not allowed to give financial advice, but I can look at a market timing graph and give you guidance as to what to look for. Eagle, I can't tell everybody in this room, oh, look at the history, go buy now. I can't do that. I'm not certified to be able to do that. But when I'm looking at the movement of over 9,000 stocks, this at least gives me some insight. How about right now, I've got a gravestone doji forming on a 5-minute graph. That's not positive. So I want you guys, guys and gals, I would really love to see you exhibit some sense of caution, some sense of patience. And now look, on the last 5-minute bar, we just went negative. Now, that's only one bar. I know it's only one bar. It's a 5-minute bar. I know the whole 9 yards. But I'm not all about just telling you what you want to hear. My job is to read. And look at right here. On 5-minute bars, what's that? Hammer formation. What did we do? Reversal. What are we getting right now? A bearish candle. Candlestick formation. I got a bearish candle. More selling pressure and a closed candle. And it's getting bigger. All I say is I would rather err on the side of caution. It ain't about being scared. Because, scared money don't make money. But sometimes when you don't exercise some semblance of caution and just run because I don't want to be scared, man, you get jacked up time and time again. And then you say, I'm never going to do that again until the next time. So I'm looking at 5-minute bars on an indicator that tracks over 9,000 stocks to give you useful information. Not what I think you should do. None of that. This is useful information, folks. Robert said it's about being smart. I also think about that as well. Anyone telling you to buy, don't listen. Listen, everybody's got an opinion, and I respect those opinions. Buy when others are fearful. All right. And Eagle, that's a lot more aggressive thinking. And if that fits for you, rock and roll with it. But it doesn't fit for everybody. The guidance that I try to give is at least trying to fit the majority of the people. Maybe it doesn't fit all of the people. I totally understand that. I totally understand that. All right. It's good to be scared. What is bad is to be in a panic. And I'm not panicking about anything. I don't trade the day of the Fed unless I'm selling premium on the SPX. Not be a bad idea as well. Glenn, you are the guru. Oh, yeah, I'm not a guru. I'm just a guy. I'm just a guy looking at information and helping you to make better decisions. That's what it's all about. All right, I'm going to go put this back on the intraday 1 minute bars current day. There's a little bit of a rebound. Here's our day trading timing signals. We still have a bearish call right now. Let's go put on the DTI. We still have a bearish call, so I think that we're still on the right side of the market. I'm not telling anybody to think about buying yet. Even on the rebound, the DTI, the bearish DTI is still above our trigger point of 1.2. All right, so this was just we go. Let's go, let go, can't hold me back anymore, says Ryan. I'm letting you go, Ryan. Go for it. You want to go? Go. All right. Now, interesting about the last 1 minute bars, look at this. Let me zoom in a little bit. This is interesting. Notice on that little bit of pullback, 2 1 minute bars, the 3 and the 8 are still holding, even intraday. It's kind of interesting. Again, for those people a little bit more aggressive, that 3-8 cross could have been a good opportunity for you to get in intraday. I am of the mindset, let's wait. Let's wait. And, can we still have buying opportunities if the market continues to rise? Absolutely. I'd rather err on the side of caution, though, rather than trying to, a lot of people out there playing with, you guys invest in real money. I want to try to give you the higher opportunity to make money with that real money. All right. That's it in a nutshell today. All I really wanted to do was concentrate on what was going on with the Fed. I didn't put a lot of stocks together. We did look at on the fly some of the stocks that you wanted to look at. Would you be a speculative AI stock? Extra stop, Mark. I own Xro, and I'm super speculative on that play. But I know that it's a speculative play. And anytime I talk, Mark, I'm so mad at you right now. Anytime I talk about Xro, I let everybody know it's a speculative play. All right. Let's all go buy Target, buy Bud Bear today, side trader. Why are you trying to get the room started? Why are you trying to get the room all riled up? Tell me, why? What's the reason of trying to get the room all riled up? All right. I'm getting ready to go. Joey, hey, we got 65 likes. If it was worth it for you to be here today, hit the like button. Hit the like button. I can't believe we had up to 300 people today. Well, that makes sense because it's a Fed day. I'm trying to get 300 people in here when it's not a Fed day. If you liked what you saw today, hit the like button. If you're new to the channel, and if you like the content, don't forget to hit the subscribe button. Don't forget to hit the subscribe button. Hit the subscribe button and the bell icon so you'll be alerted when we get this stuff out here. All right, so hit the like button. We try very hard to bring the best content that we can to you. No, Amir, I'm not looking at another stock today. All right. I got a live stream tomorrow. At 2 p.m. I'll look at some of your stocks tomorrow. All right. And Tesla, they were way down today. Tesla's a good long-term play. And I think that now Elon Musk is pulled out of Twitter. He's still going to have his foot in there. And putting more of his concentration back into Tesla, I think that's what was needed. I totally think that was what needed. That was what was needed. I think long term, it was a good play. Jerry says you're begging people to buy. To buy what? Who's begging people to buy? What are you talking about, Jerry? Sigh. I know, Eagle. You said that. I knew as soon as I said that, I was like, sigh. All right. I gotta go. Thanks for all my people in the background that was doing what they were doing. Ryan in Boston, and was Badger here today? I don't even know if Badger was here today. All right. So with that being said, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia, salam, shalom, namaste, yasu. Until next time, folks. See ya.